Hello investors and traders, today I'll speak about best dividend stocks to buy right now. It will be Verizon, Altria, and of course one new oil and gas stock with a dividend yield about 8%. 8%, it's no jokes, it's a lot. So let's start with the first company for today. It's Verizon with a dividend yield 7.8%. It's really a lot. So here about Verizon, it's the US largest wireless carrier with over 100 million subscribers and the second largest wireline service provider. It offers prepaid, postpaid and unlimited 5G plans. Verizon offers internet subscription plans under its Fios brand, which include fiber, optic, DSL and mobile pods. For internet subscription continue to grow with broadband net additions while wireless has been sleeping. Also, we see a lot of services, and of course they have a dispute that allegations and await potential regulatory actions possible leading to the fines and expensive replacement costs. Wireless broadband stocks are some of the best high dividend stocks. Also, let's check it. Of course, let's check it charts. So look, actually traded in a range last 7 years, 33, 34 bucks, 260. Now the lower border on this range, by the way, the momentum indicator is less than 30 on the monthly time frame, so the stock is very already sold in my mind. By the way, let's check it here in my custom stock research. I prefer to check it here. So Verizon performance, it's down more than 50%, PE ratio 6. It's very cheap. The average is 15 for S&P 500, NPS only 1. In my mind, the fair PS about 3, about 4. So here, very low valuation. Net income is positive, it's 15%. Debt to EBITDA is 3.6. It's not a problem. It's still not a problem. Interest coverage is okay, it's very strong, and of course the payout is 50%. So very nice potential for a Verizon company to increase the dividend payments. The current dividend yield, as I told you, is very close to 8%, and here a nice also dividend increasement history, 13%, and by the way the 3-year dividend growth is about 2%. So Verizon is now in my mind very discounted. The market cap 140 40 billion bucks, so it's a huge company. And of course, as I told you, its financial stability, its financial position in my mind now still okay. So you can buy a nice stock, in my mind stable. By the way, from its high levels it's down more than 40%. And also let me check its quarterly data. Yeah, we see that 30 stable, 33, 32. It's revenue 33 billion bucks, and by the way the marginality here it was 15, 14. Also very stable business. So of course it has huge investment, huge capex, but as I told you previously, the valuation here is very cheap. So we got a cheap valuation. Also the payout is only the payout ratio only 50. Yeah, it's 52. So in my mind Verizon, a nice stock that of course I'm considering buying right now. Maybe it will be in my portfolio 2024. Of course I will update you by this information. The next stock is Altria Group. It's a tobacco company. Let's read about this company a little bit. So Altria is the parent company of the largest tobacco company in the world, Philip Morris. As smoking rates decline, the company can still churn strong profits and bolster its non-smoker segments. Altria continues to post 5% annual growth rates with a wide free cash flow margin, and the company consistently performs stock buybacks program and has a solid dividend history, making it very shareholder-oriented company. So there is a constant regulatory risk with its tobacco products. The move away from tobacco into electronic cigarettes is a secular trend Altria is cashing in on, and the company of course has a vapor business. It's continued to grow. The CAGR of 16% compound annual growth rate, and also scoring the lead on its smokeless oral nicotine products, considered the less harmful alternative to cigarette smoking. So in my mind, the dividend yield, look, it's a very serious figure. 9% dividend yield. In my mind, the chart using daily waves, it was the first wave, the second, the third. The fourth wave can finish here. If it finishes in here, so I'm expected to see another move up. It will be the fifth wave. Usually the fifth wave is higher than the third one. That's why I'm expecting to see Altria a little bit higher. But anyway, let's check its fundamental parameters. 77 billion bucks. Its market cap is down more than 4% in this year. But valuation, look here also the valuation is very cheap. Only 11 PE, PS in my mind fair is 6. Here it's 3. It's the most marginal company from our group today. Any problems with that, by the way? Very strong interest coverage. I reminded interest coverage is operational income of the company divided by interest payments, so it's supposed to be at least 5, 6. Here we see nice figure of 11, and of course the very strong history. Dividend increasement 66%. So of course Altria usually in the top list of dividend investors. Of course they considering buying such a nice stock in their portfolio. But look, as I told you, now I'm constructing my portfolio for the next year. Of course it should be dividend oriented, and Altria supposed to buy it in the near time. By the way, it's down more than 40% from its high levels, so a nice discount. So to recap, Altria, the valuation is okay, very cheap, with problems with it. No, I don't see now. For me, it's okay. Dividend yield is very high, and of course a very strong and nice dividend history for this company. And let's move to the next and the last stock for today. This company is a new one. This company is named Enbridge. So it's a Canadian-based energy infrastructure company operating in multiple segments. It delivers energy and transport and stores crude oil and natural gas. It's operating Canada's largest natural gas distribution network. Rising energy prices are a bond to its business model, which relies on securing long-term contracts and hedging commodity pricing. The company also invests in clean energy assets, including solar projects, wind farms, and other reliable energy projects. Chart. So in my mind there is a range 33 bucks to 48. Now we're in the lower border of this range, and of course a nice moment and a nice time to buy the stock. Market cap is very close to 70 billion bucks. So it's a serious company, and by the way, the momentum, the RSI is 37, so the stock already oversold. And of course you can receive a nice discount, 27% from its high levels in this company. Enbridge, the ticker ENB. Let's have a look on its parameters. So net income margin, it's a profitable company, a little bit higher. We see the debt to EBITDA ratio, but it's the most dangerous, dangerous company, the most dangerous stock in our video today, and the payout also a little bit higher, but it's dangerous, the payout high, the other parameters are not very low. But anyway I guess here it can be a nice potential growth for the stock. And also don't forget about the dividends. dividend yield is about 8%, so of course it's interesting for me as a dividend investor. So if you like my channel, if you like my video, so don't forget to press the like button. It will help me to promote my videos, that will help other investors, traders to watch and receive new information, new education. And of course, see you on the next time. Bye.